Baseball's over. Football feels like it's over. What else do we have? Accounting and auditing news. That's it. What's happening with the FASB and the AICPA? This is the IssuesWatch podcast. Hello. Welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm a partner in charge of accounting and auditing at Sobel & Company. As a quick disclaimer, the views and statements expressed herein are my own and not necessarily those of Sobel & Company or New Jersey Society of CPAs. So what is going on with the FASB, AICPA, and other? So when I started pulling my notes together, I thought that the FASB was kind of quiet this week. Nope, I was wrong. The FASB did have some meetings, and they did have some discussion items, not a lot of, no accounting pronouncements out, but they did have some items. They discussed revenue recognition, surprise, surprise, but this one as it relates to, in connection with 805, ASC 805, which is business combinations. They have an exposure draft on the fair value of the equity, fair value and equity security sale restrictions. Remember, we discussed that last time, so if you have that, equity is with some restrictions, you might want to look into that. They came up with some proposed, remember we talked about taxonomy last time, but this is an interesting one. Proposed technical and other conforming improvements for 2022. So they came out with a paper asking for input from readers of financial statements as to how they should be approaching the taxonomy of financial reporting. So if you get a chance to look at it, and if you feel compelled, comment back to them. I know that the New Jersey Society does comment on certain, their A&A resource group does comment on certain items. I don't think that they're commenting on this one in particular. But if you feel so compelled, I recommend that you look it up. If you need the information, feel free to reach out to me, and I'll be happy to email you whatever information I have. Again, I will always share information that is in the public domain. I won't share anything that I have a license, that I'm getting a license for. Such as the next one, Private Company Council, PCC. That's the organization that is working within the FASB to address financial reporting and accounting items as it relates to private companies. And they've addressed many different items over the years. They had a meeting, and their notes are, some of the items that they talked about this time were borrows accounting for debt modifications. Okay, this is really interesting. Now, none of this stuff is coming out yet, but you can see that they're talking about it, and you see how it builds up. Lease implementation issues. We've all been saying this at that there's implementation issues at the Society A&A Resource Group meeting. They had a discussion if this should be delayed or not. I believe it's the Pennsylvania Accounting Society of CPAs actually sent a letter to the FASB or the PCC saying they think it should be either delayed. Some people think it should be held off for private companies completely. But the New Jersey Society, because in the meeting it was kind of split as to what the position was of the group, decided not to make a comment because some people felt it was just time to adopt it. Some people felt, let's wait a little longer. And some people felt, let's not do it at all. So it was just too split. There couldn't be a strong consensus on it. So we don't know where it's going to go. I honestly think it's going to come in. Here's an interesting topic that they brought up. This is for all your tax people. Profits, interest, now I got you listening. Profits, interest, and the interrelationship with the partnership accounting. Okay? And then they grant date fair value for equity-based compensation. I appreciate that over the years they finally changed it from stock-based compensation and really stuck with the equity-based compensation. I know it's been a long time, but I still say stock-based compensation. And of course the credit losses. Remember, the credit losses are CECL. It's kind of delayed for a little bit. And I've attended some seminars that relates to it. I'm telling you, this CECL stuff, this credit losses stuff is big. It's going to be heavy, and I don't know how private companies are going to do it, measuring for their allowance for doubtful accounts. Everybody has it for the most part to consider credit losses, so you should always just watch it in case it comes out. AICPA was fairly late this time. Peer review sent out some proposed changes as it remote procedures, performing peer reviews remotely, in other words, especially for system reviews. They did remove certain elements, eliminating surprise engagements. These are just discussion items. Don't get excited yet, okay? Significant deficiency in engagement review being removed. So there were just some items that I thought that was very interesting, and then there's some other modifications. I remember we reported last time, if you didn't see it last time, go look back. I mentioned an article that was in the Wall Street Journal where it was pretty much they were attacking the strength of our peer reviews. And while this, I just discussed a couple things they're removing, I anticipate that they're not going to weaken the peer reviews, especially after an article like that came out, because it's questioning as I said, the strength of them and the usefulness of them. So in the other area, we'll wrap up with the PCAOB. PCAOB, I issued some very interesting documents, around 7 pages long. It's staff guidance evaluating the relevancy, reliability of audit evidence obtained from external sources. This is big because this is what they're starting to focus on now. The world is changing. You know, us old auditors used to go in and get the files or go to the file cabinet and get all the invoices and tick in. It was all very straightforward, so you thought. Now with the EDI, with all the other computer processes that are going on, the way that you're getting information, you know, stock pricing, bond pricing, all of that, the way you're getting information has changed significantly. And their PCAOB is starting to focus on the veracity of that information, the reliability of that information. And you know they're going to come out with something saying, how are you assuring that that is accurate, reliable information? And after a while, this starts to trickle down. You can either say it goes to the AICPA, the GOA route, but you should look into it. It's not a long document. I think it will be made available to you. It is a public document, so I recommend you look that up. PCAOB is also focusing on making CAMs more readable. And I don't mean our member Campardo, I mean making CAMs more readable. Critical audit matters. PCAOB came out with it a while ago. They came out with critical audit matters, or CAMs. AICPA, not to be outdone, came out with key audit matters, or CAMs. Don't know why they couldn't use the same word, but I know probably because they didn't want to confuse public and private. But it's not required for private companies under the AICPA. You can opt for it, you can be engaged for it, but you can't, it's not required. As it relates to the PCAOB, they do have the critical audit matters that you're required to be reporting on, and they came up with an article on how to make the CAMs, critical audit matters, more readable. As simple as subheadings, as simple as vertical, or using non-passive language. So if you can look into that, if you do public work, or if you are interested in it, if you're going to do key audit matters even, you may want to look this up to see some examples of what they recommend. And there's, of course, still, we mentioned last time, but I will say it again, there's a move to strengthen the lead auditor's oversight over other auditors. Okay, so if you are the lead auditor on an audit, they want to have you focus on that. Those are the big items to report this episode, and I do appreciate you listening in and watching. And if you ever have questions, feel free to reach out to me. I know that people are wondering. In a few weeks, I will have a special guest with me, just we can all tell them we miss him at this point, so we're looking forward to that. So we will wrap it up in closing by saying that I encourage all of you to attend the Society's annual Accounting and Auditing Conference on November 9th, taught by John Fleming, Ken Heaslip, and Rebecca Lee, all extremely knowledgeable and great presenters. I've seen them speak a lot. They're wonderful. Go to njcpa.org/conferences for more information. And as I always recommend that you join the NJCPA Accounting and Auditing Standards Interest Group by going to njcpa.org/groups. Thanks for joining us. We will be back with a new episode in 2 weeks. You can access all IssuesWatch podcast episodes at njcpa.org/IssuesWatch, including Ralph's, Don's, political ones. That's it. Jeff, how could I forget you, Jeff? I don't know if we're going to cut that, but Jeff, we do love you. So thank you very much.